Vineet Bhatnagar, Managing Director of Phillip Capital, joins us now. Vineet, good morning. Thank you for joining us. Vineet, globally things are looking quiet, calm and stable. Do you think worst of the fall is behind us, or it's too early to make a strong case for a durable bounce back?
I think, the point that you're making is pretty much my sentiment, which is that the kind of news that is coming around from US is perhaps going to be one where there should not be any further bad news for the equities marketplace. There was also an announcement by the Chinese central bank yesterday, and therefore I'm inclined to believe that the downside for the global equities should be limited. However, the reallocation or the outflows from some emerging markets and inflows into developed or other emerging markets is something that we need to keep in mind, and that should be the only factor that could cause some more uncertainty. But otherwise, global equities seem to be looking all right on the back of the data that came out from the US last night.
In the near term though, Vineet, since we have had a fall below the 5600 mark as well, would you say there is a firm bottom around 5550, 5500 thereabouts, or is there a chance that the market could sink further lower?
It is a very key level that you mentioned, and we are all looking at 55.50 to be that precise support which should hold. Yesterday or day before yesterday close did indicate that the capitulation factor that we track here had spiked, which resulted in the intraday high of 56.60 that we saw. Unfortunately, it was not sustainable, and therefore the close happened just marginally flat versus the Monday close. It remains to be seen if on a closing basis we are able to close above 56.60 or 56.71 to be precise. If that were to transpire between today tomorrow, then I think we will be in a manner of speaking in the short term out of the woods and inching towards 57.50. But how the market behaves in today's session and tomorrow remains key, and we are all watching at 55.50.
Vineet, the problem for Indian markets, I guess, is only one: flows. Inflows have become outflows. FIs which were buying into Indian equities, they've stopped buying and they've started selling. They've been net sellers to the tune of about 10,000 crore in a matter of just 10 days. So how does one judge which way money is going to move?
Going by what they have done in this particular expiry itself, the trend is discouraging, because just to give you a complete picture, we started the June expiry with a net long position of about $1.4 billion in the Nifty futures. During this month, there is a cumulative sell of about $2 billion, indicating today a net short of about $600 million as far as Nifty futures is concerned. Additionally, as you rightly pointed out, as much as about 10,800 crores has been sold by the FIIs. And this entire process of liquidating out of the cash market has been done quite systematically by the FIIs, because the detailed data that we have now in front of all of us indicates that the first thing that they did was to start liquidating their long positions in the Nifty futures. Simultaneously, they were buying the puts of 5,500 and 5,600, and then the selling in the cash market came about. So the manner in which they have come out of the cash market positions did indicate that it is not necessarily the trading book alone which has perhaps got liquidated. It appears that they may have taken their long positions in the cash market out, which could be medium-term holdings. If that's the case, then a new inflow into the cash market, which is what one is looking at, rather than Nifty options and futures, which could be the trading book, looks something that will not come back very quickly.
Vineet, what about the bank Nifty, considering the banking pack has had a very rough ride this entire series?
I mean, if you look at it, this entire calendar year, the bank Nifty and the bank stocks, both the front line as well as the second tier ones, have been not only the bellwethers or the leading indicators, but also the one which have been really, fraught with volatility. So, if we are seeing ATMs of 22% and above in the single stock futures and some of the sectoral indices, bank Nifty will top the list even going forward.
Vineet, just want to get you in on the entire oil and gas space and the way some of these stocks have panned out. We've seen some action coming in for Reliance and ONGC, of course, on account of the OVL deal yesterday, saw good traction build up. Is there any trade there?
Yes, I think, our portfolio holders will be happy to keep on, keep their long positions on for a while for even the OMCs, because let's be honest, for a long time, this particular sector has really been a low momentum sector. There has been very little that has happened, but a lot of fund managers and portfolio managers have been holding on to oil and gas for a while. So here is a time where they could either add to it or definitely hold on to the OMCs and the oil and gas sector stocks.
Reed, somewhere are you working with the possibility that 5,500 on the Nifty will remain intact irrespective of the environment, or now this entire thesis of 5,500 is also coming under threat?
My own sense is that 5,500 should not come under threat.
So if that is the case, are you a buyer in this market, because what we are hardly 100 points away from 5,500 on the Nifty?
Yes, in fact, the trade that we are talking about for the July series is one where you could sell one call of 5,800 strike for Nifty and buy and sell one put of 5,500 strike.
You expect Nifty to appreciate by about 100 to 150 points in the month of July, and you are not looking at a meaningful V-shaped recovery?
No, we are looking at not 150 points Nifty as a straight line recovery, because I think it is important for it to cross the previous hurdle on the closing basis of 5670. But if 5670 were to be taken off, we are looking at something like 5750 as the next target. The strategy in the options will play out well, regardless of the fact whether 5750 really comes about or not. Technically speaking, but that's the trade that we are suggesting in the options.
What trades, Vineet, are you looking at executing when it comes to the metal space? And I'm guessing it would be an all short list. Vineet, what about the metal sector? Any trades that you're looking to execute there? And my guess is it would be all on the short side.
That's right. Although metal sector or the single stocks in the metal sector have indicated above the average rollovers yesterday alone, our sense is that the sector itself is under the negative bias. So yes, the trades that will come about will be on the short side.
Vineet, at the current juncture, markets are oversold. The selling has been sharp. And historically, I've always seen that when markets are oversold and when selling is very sharp, the recovery will also be sharp. But you're not constructing that scenario. You're not betting on a very sharp recovery. Why is that?
Only because of the way the market closed yesterday. I would have been very confident of the stand that you are proposing if the market had not closed at 3:30 where it did yesterday of 5609. The rally that we saw, or the sharp rebound that we saw in the midday trading yesterday, if it had sustained itself, I would have subscribed to the opinion that you are indicating. It's only that keeps me short of looking at a V-shaped recovery, unless today is the day to prove me wrong.
What about healthcare, that is pharma, and IT, Vineet? Do you think that come next series and we may see some recovery, or do you think are they going to fall in line with the rest of the market and be laggards yet again?
Based on the rollovers that we witnessed for both these sectors, IT as well as pharma, they look as if the trend that is visible should continue even in July. In IT, Tech Mahindra and Infosys were looking on a bit of a stronger footing. On the pharma side, barring Ranbaxy, the rest of the landscape was looking positive. In particular, Lupin was looking strong, and so also DRL. So that's our understanding of these two sectors based on the activity of day before and yesterday.
Vineet, so whenever market will bounce back, because nothing falls in a straight line, markets will stabilize, markets will bounce back. What will bounce back the fastest? Beating down cyclicals, high beta stocks, or it will be back to good old consumer and defensives?
I guess, by definition, high beta stocks should show the rebound or the characteristic of a strong, shall I say, a strong recovery from the bottoms that we have seen recently. But otherwise, in line with how the macro will pan out, if one were to look at the next 12 months, 18-month kind of scenario, the cyclicals are the ones that should benefit quite undoubtedly.
Do you have a view on future retail? Because future retail clearly is a special situation stock, and after the demerger, the pure retail business, which is a low margin business, has got trashed out.
No, I do not have a view this morning on future retail.
How should one approach a stock like JP Associates? I guess markets are worried about companies which have a huge debt and companies which require fresh or additional capital to grow. So we need at a time when we could be staring at a tight and maybe a very non-supportive liquidity regime. Do you think one should avoid companies which need fresh capital to grow?
That will be my assessment, because I think as the sentiment starts improving, or shall I say starts stabilizing, money is going to be very choosy in terms of where it goes, and it will not be surprising that the assessment of where the money goes will definitely be based on good money after bad, not being the approach. In light of that, companies which are highly levered, highly leveraged, and continue to require large amount of capital infusions are not necessarily going to be the one that will find favor with the lenders, and in that respect I would subscribe to what you just suggested.
Vineet, it's the mid-cap end of the market which has really been under pressure, the past couple of trading sessions. Leave us with two stock ideas from the liquid mid-cap universe.
I mean that the point that you make is clearly clearly something that we have seen time and again. Shall I say it is a lesson that we keep seeing it every time there is a sharp sell. We at this point in time, I know there are lots of them that my team can come out with, but I don't have any two new sells that I can give you this morning, because I have been focusing on the front lines more.
Okay, fair point, Vineet. Let you go on that note. Really appreciate you taking the time out and joining in.